From the world of politics to the world of business, this is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. Well, it's one down and three to go. Congress and the president took care of funding the government yesterday and beat that midnight deadline. But they still have infrastructure, the budget, and the debt ceiling to address. To take us through it all, we turn now to our Washington correspondent, host of Sound On Bloomberg Radio, Joe Matthew. He is at the White House today. So, Joe, as I say, one down, that's good. We're going to keep the government going. That's a good thing. But what's next?
Yeah, no shortage of crises on a beautiful day here in the nation's capital, David. What's next is infrastructure, or so we think. Nancy Pelosi left the House last night after midnight saying there would be a vote today. Now, of course, this follows hours of negotiations that led to no deal last evening, no vote on the bipartisan infrastructure bill. And we're not entirely sure if it will actually happen today, remembering that Nancy Pelosi at this time yesterday told reporters that she was aiming for a vote, expressing confidence. She suggested almost as a negotiating tool. She says that's what you have to do, is lean in toward the end of a bargain like this. We saw the White House get deeply involved last night as well and throughout the day, with domestic policy advisor Susan Rice and economic advisor Brian Deese and some others shuttling between the Speaker's office and those of lawmakers, including Senator Joe Manchin, who, as we learned together on the air at this time yesterday, David, gave his top line number at $1.5 trillion. Now that we have that detail out, the White House is getting much more directly involved in what is happening, trying to make sure that we get some kind of a deal here. Jen Psaki, the press secretary, saying that as Democrats huddle on Capitol Hill, that they're open for business here and they're ready to talk. She actually issued a statement not that long ago, late last night, early this morning, saying a great deal of progress has been made this week and we are closer to an agreement than ever. She adds, though, David, we will need some additional time to finish this work. That's where we are now. It could be another long day on both ends of Pennsylvania Avenue. And if they don't get a vote today, David, it could be a long and working weekend.
Yeah, Joe, you're being a little bit modest there. We found out with that $1.5 trillion number, at least here on Balance Park, because you were up there in that gaggle with Senator Joe Manchin. But let me ask you specifically about how much clout, political clout, the White House has in this negotiation back and forth. I understand they really want it badly. They're having a lot of meetings. But I heard somebody yesterday make an really interesting point. Actually, it appears right now, if you look at the polling, that both the infrastructure and the Build Back Better are more popular than the president is. Can the president really help get it over, or does he need them to get that so his popularity goes up?
It's interesting as you turn this thing around and look at it that way, David. I think you're onto something here. Joe Biden needs a win. This is everything he campaigned on. If you look inside what is supposed to be in this reconciliation bill, the expansion of Medicare, the child care component, not just the hard infrastructure that they could vote on today. This is what he got elected on and is now why he's in this White House. So yes, to your point, Joe Biden needs to work out a deal here. But remember, they didn't see yesterday so much as a deadline as Nancy Pelosi did in the House. She made that promise to moderate Democrats. This White House sees some time left to score a deal, to bring parties together. And as I mentioned, now that the cards are on the table, this White House hopes that that will be a little bit easier. David?
Yeah, and in fairness, they met the one deadline they had to make, which was keeping the government open. Thank you so much to Joe Matthew. He's the host of Sound On. That airs weekdays at 5 p.m. Eastern Time on Bloomberg Radio. We're going to turn now to one of those trying to plow through all of this up on Capitol Hill, Democratic Congressman Caston of Illinois. So, Congressman, thank you so much. I understand you came out of the Democratic caucus to talk with us. Really appreciate it. Give us a sense of what's going on in that caucus right now.
So I'm really encouraged. You know, we ran last cycle on the promise of doing all of these things, lowering prescription drug costs, dealing with the climate, building out our infrastructure, and we're going to get it done. I've always been partial to Duke Ellington's line. I don't need a goal, I need a deadline. And we made a lot of progress over the last 48 hours with respect to moving some folks along. And you know, if it takes another day, if it takes another 30 days, that's okay. I'd rather be in a position where we say before we inject a couple $1 trillion into the economy, we've sorted through all the equities, than rushing it through because of an artificially imposed deadline. But I'm confident we'll get it done.
Yeah, well said. And I will infer from that it's possible that we won't make this latest deadline from Nancy Pelosi, the Speaker of the House, saying they'll vote today. Maybe yes, maybe no. At the same time, what's going to change? Because there's been a lot of negotiation already. You seem to have an impasse here. What's going to change within the caucus that will get it done?
Well, look, I think every single person in the caucus, to a person, wants to make sure that we have the infrastructure package done, that bipartisan infrastructure framework that came out of the Senate, and this broader reconciliation package, the Build Back Better Act. What I think is tricky is that the provisions in the Build Back Better Act are things that were incompatible with a bipartisan framework. It's tragic. I spent 20 years as a CEO in the energy industry. I'm as middle of the road politically as you get, but it's tragic to me that if we're prioritizing lowering drug costs, if we're prioritizing climate, we can't do that in a bipartisan framework. So really the push and pull right now is just making sure that with very thin majorities in the Senate and with essentially one entire party that has said we are not going to cooperate in this discussion, we're doing what legislators do. We're negotiating the parameters of a bill, but we're doing it with one arm tied behind our back because the Republicans have chosen not to participate. So we'll get it done, but it's a little harder when any one person may have an issue that can tank the deal.
Yeah, when it comes to the Build Back Better part, it looks like it's going to have to be the Democrats. If it gets done at all, it's going to be the Democrats pretty clearly. Give us a sense of how the Democratic caucus reacted, from your sense of talking to your colleagues up there, to Joe Manchin's proposal yesterday. Let's take the $3.5 trillion down to something like $1.5 trillion. Is there any appetite for that?
Well, I think what's hard and what we're finally starting to get some clarity from Manchin is that the top line number fundamentally doesn't matter because it's fully paid for. The cost of this bill to the American, as far as the actual net change in our fiscal situation, is zero because it's fully paid for. The question really becomes what's the substance of the bill, and Senator Manchin and Senator Sinema prior to yesterday were really pretty unclear as far as what are the things you don't like. Do you think we should not help out, struggling children who are below the poverty line? Do you think we should kick the can down the road on climate, until maybe someone with leadership skills we lack can deal with this? We're starting to get some clarity, but I think the press points on this are really going to be the substance of the policy, as it should be, not the headline number, because the headline number will be paid for one way or the other.
Okay, so Congressman, hindsight is always 20/20, and it doesn't do much good to say what could have happened. But given what you just said, that the number doesn't matter that much, do you think that some people made a mistake by putting that number out there? Because it surely made a big bogey for the Republicans to shoot at.
Well, yeah, as you said, hindsight is 20/20. It's important to understand we have a $20 trillion economy. We're talking about $3.5 trillion over 10 years, $350 billion a year, of which is fully paid for. That's a rounding error in the economy. You could make the case for us being much stronger, but I think it's much more important that we really talk about the provisions that are in there. Again, people really like those provisions in it. And we're talking about giving people on Medicare the ability to finally have dental and vision care. That's really important to people. Extending the child tax credit, those checks that people are getting now, extending those and making them permanent. Providing a whole bunch of clean energy incentives so that we can build out transmission systems and clean energy, the Clean Energy Power Plan, to make sure that we give a better planet to our kids than ones we hear from our parents. Those are really popular. Let's get those all done, and yes, let's talk more about those and not the number, which is, again, the 1 year spending from this number is a very small part of the total U.S. economy.
Tip O'Neill famously said all politics is local. I believe it was Tip O'Neill. Take us back to your home district. When you go back there and talk to your constituents, what do they make out of what's going on right now on Capitol Hill? The whole thing, the debt ceiling and the funding the government, everything else. Can they understand what's going on?
I think sometimes we get caught up in our own knickers in Washington. When you talk to people about what their real day-to-day issues are, people are concerned about COVID. It still is a top issue. People are concerned about, can we trust that this 275-year-old experiment in democracy we have is going to be robust in the wake of what happened on January 6th? Those are the issues that matter to people. Are they going to be able to know that if they get to a point in their life where all of a sudden they aren't working anymore, will they have enough money set aside to pay for their health care bills? That's what people care about. This inside baseball stuff about the process and who said what to who and what you think about Joe Manchin, I guess it makes good television, but nobody really cares outside of the Beltway.
So, Congressman, finally, I want to go back to yesterday when you asked some questions of Secretary of the Treasury Janet Yellen about the debt ceiling. You basically said, should we have this thing at all? And she responded in some substance, look, if you appropriate money, then why do you put it on our shoulders to figure out how to pay for it? Why are you putting us in this jam? Should we have a debt ceiling?
Absolutely not, and I'm delighted that Bill Foster has introduced this bill to eliminate the debt ceiling. And it's important for your viewers to understand, every member of Congress votes on spending packages. We may vote for, we may vote against, but the majority rules, and the majority decides how we're going to spend our money. Every member of Congress votes on tax policy. So how much of the spending that we do is going to be paid for by taxpayers? The residual that remains is debt. We don't get to go back and second guess in the future, I don't want to pay for that. We don't get to go back and second guess in the future and say, hey, you taxpayers, you don't have to pay, you can just opt out of this. And we have this completely manufactured crisis in the debt ceiling where we have given Congress the ability to say, I don't want to pay the debt. That is an act of suicide to choose not to do that. It destroys the financial markets. $8 trillion of the current deficit was built up under Trump. And to now have the entire Republican Party say, yeah, I voted to add debt to the economy, but now I don't want to pay my bills. My view is that says that if you have a weapon of mass destruction and you choose to use it, you shouldn't be allowed to play in the toy box anymore.
Okay, Congressman, thank you so very much. That was really helpful. That's Congressman Sean Caston, Democrat of Illinois. Coming up here, continued signs of inflation from numbers out this morning. We talk about them with Julia Coronado of macro policy perspectives. And a programming note now, I'm going to be anchoring live from Capitol Hill next Tuesday and from our Washington Bureau next Wednesday and Thursday. Highlights will include Senator Dick Durbin from Illinois, Anthony Fauci, and Simone Sanders from the White House. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. Federal workers will have to prove they're vaccinated against COVID by November 8th or face suspension and possible termination. That's according to new guidance by the Biden administration, which adds that all new hires must be fully vaccinated. The instructions mark the latest step in the president's push to increase vaccination rates nationwide. He announced earlier this month that all federal employees must get the shot. The U.S. government's challenge to a new Texas law banning abortion after about 6 weeks of pregnancy before most women know they're pregnant will have an impact far beyond reproductive rights. That's what a Justice Department lawyer told a judge today, saying the law encourages, quote, vigilante justice. The government is asking the court to temporarily put the ban on hold. It's the most restrictive abortion law in the United States. Supreme Court Justice Brett Kavanaugh has tested positive for COVID. The court says Justice Kavanaugh has no symptoms and has been fully vaccinated since January. His wife and daughters tested negative on Thursday. The court is scheduled to begin its 9-month term on Monday. All 9 justices are fully vaccinated. House Democrats went home last night without voting on that $550 billion infrastructure bill. Speaker Nancy Pelosi will try again today. The vote's being held up by a fight between moderate and progressive Democrats on the rest of the president's agenda. Progressives say they won't vote on infrastructure until Mr. Biden's full $3.5 trillion spending bill passes both houses of Congress. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. Economic numbers released this morning showed continuing signs of inflation, if anything, a bit higher than had been expected. To interpret these numbers for us, now we welcome Julia Coronado. She's the founder of Macro Policy Perspectives. Julia, thank you so much for being back with us. What did you make of it? Does it give a sense of alarm here about inflation at this point?
Not really, not yet. I mean, we're still dealing with an economy that's highly disrupted, but also pretty resilient. So consumer spending was pretty resilient, despite the added worries from the Delta variant. And the price pressures still reflect a pretty volatile mix of some things going up because of supply chain shortages, while other things like airfares and hotel fares felt the effects of the Delta variant. That's a good indication that inflation is still a mix of relative price movements. There's a lot of volatility in there, but we're not entering this sort of wage price spiral where everything is just going up and up and up. And I think the next phase of the recovery is going to be a test of this, really. So the stimulus, the power of the stimulus and the reopening of the economy really lifted all boats in the first half of the year. So profits rose, incomes rose, spending rose, and prices rose. Everything went up. But the next phase is going to be more of a mix, right? You don't have the cash infusion that you had in the first half of the year. Reopening is largely behind us, and now we're navigating sort of what does the outlook look like for the pandemic. And consumers are going to have to decide what they're willing to spend money on. Will vendors and retailers be able to pass on those prices in the same way? And so that's what we'll be looking for actually in coming months is how we know there's a lot of supply chain bottlenecks. We know that shipping costs are going way up ahead of the holiday season. How easily are those prices going to be passed on? How much will consumers shift away from that good spending that's been so dominant in the last year, really, and shift back to maybe some services? And a lot of that, as Chair Powell emphasized, sort of frustratingly so, depends on the pandemic and where we go from here.
So, Julia, I want to pick up specifically on one thing you said there, which is that it's different things driving the inflation at different reports. I mean, it was at one point used car prices, and now they aren't driving it the way they did before. At the same time, there seems to be always something that kicks in. I mean, even this week we had natural gas prices really spiking up, and we have supply chain issues that even Chair Powell admitted when he testified up on Capitol Hill this week are worse and lingering longer than he thought. At what point do we start to be concerned this is not just, as he would call it, transitory?
Well, so the way Chair Powell defined transitory was not so much in a period of time, but does it convert into an ongoing process of all prices going up, all wages going up? We're not seeing that yet. So we are still seeing relative prices moving around with what consumers want to buy and what's available to them. So that's not an ongoing inflation process. It's very volatile. It's been very high. I think one of the disappointing realizations of this recovery so far is how fragile supply chains are globally. But a lot of this is still tied to Delta. You know, the renewed supply chain bottlenecks and friction, some of that is tied directly to the surge in the Delta variant and factory shutdowns and port shutdowns in Asia. So, you know, that's the pandemic rearing its head again. And ultimately, we do believe that businesses will solve these problems. They have armies of supply chain people working on solving these problems. It's not going to happen overnight, but will that be converted into, again, an ongoing process of all prices? I mean, if you look at, say, the period of the 70s, literally every single price was going up month after month. And we are not anywhere close to that right now. We still do see this mix of things. And so, and various measures of expectations. And one of the questions around supply chain price pressures is, does it kill demand? That's the typical thing we see with energy prices. When energy prices spike, it doesn't translate into higher wages for consumers. And so they end up spending more of their wallet on something else, or more on energy and less on other things. So, that's the question for some of these other supply chain pressures. Do higher car prices mean that consumers spend less money on other things? Do we see, we have seen some nice wage gains, but they've been very concentrated. And do they recur, et cetera? So it took many years for that kind of that ongoing price pressures to spread across the economy and into wages. So we're still in the middle of a very disrupted situation, a highly disrupted economy, a disrupted labor market, disrupted supply chains, a pandemic that won't end. Right. And so, I think we just need to watch these as businesses solve these problems and consumers respond.
Julia, I just want to sneak one more in here quickly. One more uncertainty is what goes on up at Capitol Hill. How dependent is the economy, how dependent are markets right now on that Build Back Better plan?
I think it's pretty important. I think if we do see some version of the larger bill and then the bipartisan bill get passed, I think the focus will turn to what's in there and what industries benefit and what does that mean for consumers over what horizon. And all of it is moving in sort of a supportive direction. If it doesn't pass, then we're looking at a pretty notable fiscal cliff for consumers with the expiration of the child tax credit at the end of the year. And just, where do we find the drivers of growth around the world? China's slowing, the Delta variant, the pandemic hasn't ended. And if fiscal support is turning into a headwind in the U.S., I think markets might be pretty sensitive to that.
Okay, Julia, really great to have you with us today. That's Julia Coronado. She is president of Macro Policy Perspectives. Coming up tonight at 6 p.m. Eastern Time, we're going to have Wall Street Week. We will include this week Peter Krause, Neil Ferguson, and our regular contributor, Larry Summers. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. It's high time that we got to check on the markets, and to give us that, we're joined now by Kriti Gupta. So, Kriti, welcome. One of the things that your folks have quoted on to me is mega cap tech versus Russell 2000. There's sort of a trade-off going on.
Yeah, I mean, opposite ends of the trade, right? And on the forefront, you would see if small caps are outperforming mega cap tech for weeks. Well, in theory, that should be a reflation trade, right? And we should mean growth is coming back. It really helps the economy, but that's not really what's happening. It's more of a function of tech. And you'd say, well, why is tech selling off? And the going narrative has been that it's yields. That's really what's behind it. But David, it's not February anymore, which means that yield surge isn't necessarily driving tech as strongly as it did a couple of months ago. I mean, this is going to be really crucial when we're talking about just how the S&P 500, the NASDAQ has been hitting record after record. A lot of this is seasonality. September seasonality does actually matter.
Well, it was a rough September, let's be clear, for equities.
It was a rough September.
It was not pretty. And earlier this week, the big story was actually the 10-year yield. I mean, it's tamed down some now, but it really spiked up pretty fast.
Oh, absolutely. And, you see a direct correlation into the stock market from there. If you see yields lower, people immediately go into those yielding sectors in the stock market. And then tech doesn't end up driving the stock market. It ends up becoming the make or break case, where if you have real estate, consumer staples, utilities, those kind of yielding sectors do positively and tech isn't on board, well, then the market tanks. But if tech is on board, then the market does better. But it really is a function of yields, but just not in a way that it directly affects tech. It affects stock market broadly.
Okay, let me put you on the spot. I mean, we had a rough September, as I said. You said that normally happens in a rough September. Now we're in the first day of October. I'm not sure I see a lot of direction. What do I get out of this?
Well, here's the takeaway on October. So you have this kind of tension in the market where September seasonality or the October effect, historically 1907, 1929, the bank runs used to happen in October. So there is a little bit of seasonality in October as well. So which one's worse? Well, we crunched the numbers over on the Markets Live team quickly, and I'll tell you that September tends to be a worse month historically, but October tends to follow the September move directionally. So if history stays the same, if the historical trend stays the same, then October should, in theory, be a down month too.
Okay, thank you so much to Kriti Gupta. There are no bad facts. Coming up, what Evergrande tells us about the broader Chinese economy with George Magnus of Oxford University China Center, and this is Bloomberg. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. 1 out of 4 companies has imposed a vaccine mandate for American workers, a sharp increase from last month. And another 13% plan to put a mandate in place. That's after President Biden's directive ordering large employers to require shots or weekly testing. The consulting firm Gartner compiled the figures after surveying about 400 companies. Charting the course of the COVID-19 pandemic during the coming months is likely to involve a more traditional winter nuisance, the flu. As countries lift restrictions, travel resumes, and colder temperatures set in, influenza will probably start circulating as well. Efforts are underway to lessen the potential strain on health systems dealing with both illnesses. A new UK study found it's safe for people to get COVID and flu shots at the same time. U.S. Secretary of State Antony Blinken will visit France next week. The State Department says he will try to ease tensions and prevent any lasting damage caused by the United States' exclusion of the country from the new Indo-Pacific Security Initiative. The administration has been scrambling to mend fences with France and the European Union since the September 15th announcement of the Australia-US-UK agreement that canceled a multi-billion-dollar Australian-France submarine deal. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. Well, last week, markets were hit hard by the news of that crisis over Chinese property giant Evergrande. But this week, they seem to have moved on. But are they too quick to forget? We welcome now China expert George Magnus of the Oxford University China Center. And he is the author, of course, of Red Flags, Why Xi's China is in Jeopardy. George, great to have you back with us. So I guess the real question is, were the markets too quick to forget? Are there larger implications of Evergrande that go beyond whether any individual bond payment comes through?
If we just look at the company, I think the markets are probably right. I say probably because we never know for sure. Probably right to assume that the contagion from Evergrande can be maintained and kind of ring-fenced, as it were, within the property sector in China, and is not going to spill over into a broader financial contagion in China's financial markets or anybody else's. In other words, no Lehman moment, no Minsky moment, nothing like that, because basically the Chinese government controls really the banks and all of the principal actors amongst whom it's got to basically shift around Evergrande's assets and, more importantly, its liabilities. It can do that. So in that sense, I think the markets are probably right to be relaxed about this in terms of contagion. But obviously, there's a much bigger story afoot that goes beyond Evergrande, which is China's real estate sector.
Well, exactly, George. I was going to say, okay, we can limit it to the real estate sector. That sounds kind of encouraging, except when you look at how big that real estate sector is, how much of a driver of growth it's been, of employment, of what percentage of GDP is in China, it's pretty startling.
Yeah, so it was valued in 2019, 2020 at about $52 trillion. That's 4 times GDP today and twice as big as America's real estate market. The last time anybody had a real estate market that was twice as big as America was Japan in 1989. We could go there too if you want, but that's just a kind of casual kind of warning, really. But I mean, I think the problem is, it's a big market. It's an elephant in the economy. It's 29% of GDP, according to a paper that was written by Ken Rogoff quite recently. If you take into account not just construction, but housing services like managing property, buying, selling, and renting, and all of the industries associated with housing construction. So if something happens to construction activity, which it is, I mean, the volumes of building and sales now are down pretty heavily year over year. And if something were to happen to prices, more to the point, because nothing's really happened to Chinese housing prices except going up for the last 20 years, then I think this is a bear market that could go on for a decade, maybe more.
So, George, I mean, we don't want to see ill happen to any investors. We don't want to see people out of work. We don't want to see people's housing prices go down. But let's be frank, for the rest of the world, a lot of concern is, what does it mean about the Chinese economic growth engine? Can they keep driving growth if so much of it came off the property market and still constrain the property market if, in fact, they conclude they have something of a bubble?
Yeah. When I was at the coalface at UBS before I went to Oxford, we used to say that China's property market was the most important sector in the world, and it still is, actually. So in those days, of course, this was because of the, protracted exuberance on the upside. Now its importance lies in the fact that, it's basically facing huge structural headwinds going into the 2020s and 2030s. And so I think what this is going to do is, if it can be reasonably orderly, we don't know that things won't get out of control at some point, but if it can remain orderly, then I think, we're going to see a marked deceleration in China's economic growth. We would have seen it anyway, I think, but the property, the bringing forward of the property down cycle basically is going to exacerbate this. So we might get a kind of a Chinese recession with Chinese characteristics, but very, very low growth is in prospect, I think, in the next few years.
So, George, you wrote that wonderful book, Red Flags, really focused on President Xi. Is President Xi in a position to take a recession? As I recall, he's up for renewal, isn't he?
That's the 64 trillion yuan question. Obviously, China's eruption in the global economy and its own self-confidence, to the extent it has it, is basically rooted in China's economic heft and the fact that nothing goes wrong. If China's economy is going to face much more challenging headwinds in the next few years, and if things did go wrong, let's say in the housing market, or we went through a kind of a non-COVID slump in economic growth, then lots of things change in terms of the geopolitical narrative, and Xi Jinping's own position in China may be, I say maybe because this is kind of a very, very speculative area in particular, but it may be at risk if there are other senior party leaders or factions that kind of feel that maybe China's going the wrong way under this particular leader. He will be nominated for a third term next November 2022 at the 20th Party Congress. But just watch this space, I think. I mean, we always want closure very quickly. This may take kind of a few years to kind of pan out, but the economy, I think, will be a very, very important determinant of what happens in China politically.
And finally, George, I mean, we care about U.S.-China relations, those of us who live in the United States, but beyond that, it is the number one and the number two economy in the world, and how they get along or don't get along can affect a lot of the rest of the world. Are we better off, the United States, in dealing with China with a secure and happy President Xi, or one who's feeling pressed?
Good question. I think that, we have to strike a balance, don't we, between, just looking at our own options in liberal-leaning democracies, a balance between, not being cowed into submission about China's inevitable rise, but also not being complacent because it's a serious player. We can't really do anything but guess about what's going on inside China. And the risk of a kind of a more unstable China or a politically volatile China, in case they're feeling very edgy about what's going on in the economy, because the storms are kind of brewing, that makes things a lot tougher for policymakers, I think.
George, it is always wonderful to have you on the subject of China. He's George Magnus of Oxford University's China Center and the author, once again, of Red Flags. Coming up, we're going to go back up to Capitol Hill for a talk with Republican Congressman from Ohio, Warren Davidson. And we are heading to Washington ourselves next week. I'll be anchoring live from there next Tuesday to Thursday. Highlights include Senator Dick Durbin of Illinois, Dr. Anthony Fauci, and Senior Advisor to Vice President Simone Sanders. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Yesterday, we heard again from Secretary Yellen and Chair Powell testifying before the House Financial Services Committee. We welcome now one of those who was asking the questions. He is Republican Congressman Warren Davidson of Ohio. So, Congressman, thank you so much for being back with us. First of all, just tell me, having sat there, asked those questions, gotten some answers, what'd you learn?
I thought it was a great hearing. I mean, we were able to talk to Chairman Powell about really from the pre-CARES Act, the very first day when the government started shutting down, how important 13.3 was, to the stability. I mean, there was literally no buy side. People forget that at this point. There was no buy side, whether you're talking municipal bonds. Oil didn't just go to zero, went to negative. So it's kind of a refresher on how important the Fed's emergency powers were there and kind of the limits of it. And then when you talk on the most relevant thing right now, the debt ceiling kept coming up as something that has to find a way to get done. But the point I made with Chairman Powell was, whether it was in the private sector when he was a CFO or, now as a, top regulator for banks, when you extend credit, there's underwriting involved. And right now, there's not a plan to repay this debt. So it seems like if you want to raise the debt ceiling, there would be some level of underwriting. So how are you going to pay for it?
At the same time, you heard Secretary Yellen say she doesn't think the debt ceiling makes much sense at all. And her point, as I understood it, was, listen, you're Congress. You're the one who's voting to spend money. If you vote to spend the money, what sense does it make to say, we've voted to spend the money, but we won't let you borrow it in order to spend it?
Well, I think that was a little disingenuous by the Secretary. I mean, frankly, it used to be that the level of taxes were the check on the government, right? So if the people were only willing to be taxed at a certain level, the government was constrained to the level of taxation. Then they blew through that and said, well, we're only going to be constrained by the ability to borrow. And now we're not even constrained by the ability to borrow. Look at the Fed's balance sheet. They've got over $8 trillion on their books as the lender of last resort. So in a way, kind of already monetized 8/29 of the debt. We have 29 trillion in debt. The only way for the government to continue to operate isn't to pay for it with current cash flow coming into the Treasury. They have to borrow to even operate the government. So there should be a conversation, and frankly, the executive branch by itself doesn't have the authority to just borrow. That's Congress's job.
Congressman, as I understand the argument, in part from the Republicans, from your side of the aisle, it's that, wait a second, you can't divorce the debt ceiling from what you want to spend with all this money on the Build Back Better plan. Yesterday, we heard a key Democratic senator, that is Joe Manchin of West Virginia, say not 3.5 trillion, 1.5 trillion. By the way, that takes us inside of what we would pay for with increased taxes. Does that make you feel better about what they're talking about?
I was very excited by Joe Manchin's logic on that, his previous Wall Street Journal op-ed. And frankly, when that letter came out between him and Schumer, I was also encouraged that he was pushing to end the Fed's, he referred to it as quantitative easing, but their asset purchases, $120 billion a month. So a lot of people see that for what it is. It's an economic distortion. It's creating artificial demand. And look, in 13.3 authority, that was vital. There had to be a buy side. Right now, it's just inflating markets.
Let's talk about something that you're a real expert on up there on Capitol Hill, and that is digital currencies, whether it's cryptocurrencies or a central bank digital currency. One of the things we heard yesterday was a flat-out question to Chair Powell: are you going to ban digital currencies? And as I understand the chairman, he said, no, we're not. Did that give you some cause for concern, or were you pleased with that answer?
Well, it was a good question by my colleague Ted Budd from North Carolina. And it was relevant because in the March hearing, last time Chairman testified before our committee, he basically implied that if we had a central bank digital currency, we wouldn't even need stable coins, and it might diminish the need for crypto. So that's really the source of the question. But of course, the Federal Reserve isn't the body that has clear jurisdiction over stable coins. That would really be, the SEC potentially. And I think right now one of the concerns is at Treasury, not so much at the Fed, that they would treat all stable coins as securities. And of course, not all stable coins are. Some may be. I think there's a lot of speculation that Tether is effectively a money market fund at this point. So in the context, it really brings together what's going on in crypto and kind of the linkage to what we're all looking forward to late October, maybe November, when the Fed comes out with their white paper.
Yeah, I'm sure you'll be watching that very carefully about central bank digital currencies. But on the sort of, if I can say it, nibbling around the edges of regulation, we have the SEC making some noises. Actually, Chair Powell specifically made the point about money markets and how some of these things look like that. Do you agree that they should be doing things, for example, on stablecoin, like making sure that, in fact, that there are reserves backing them up if they say that they're reserved?
Look, I think Tether is a time bomb, personally. I think there should be a lot of regulatory oversight on Tether. And there should be some level of transparency as what is the quality of the commercial paper that's there. They've disclosed it's there. I was encouraged to hear them say they didn't have Evergrande, for example. But they do have Chinese commercial paper. What's the quality of that? And people can't really assess it. I am concerned that the lack of action by Congress is leaving this just ripe for regulation by enforcement. And that scares off capital. And I think a lot of capital is fleeing the United States of America for calmer pastures where they have more regulatory clarity.
And finally, Congressman, are you concerned at all, as some people say they are, that China might get ahead of us when it comes to central bank digital currency? Now, I'm not talking about cryptocurrency, but central bank digital currency. They clearly are really going for it hard. They are banning transactions in cryptocurrency. Is it possible they could get ahead of us, and would there be consequences potentially for the United States?
Well, look, the Chinese version, there are big consequences because China's version of a central bank digital currency is really the creepiest surveillance tool developed. I mean, it brings together a central look into every single transaction. Who are the parties on both sides of the transactions? It's not a third-party doctrine where you have bank reporting requirements like you do in America. Literally, the Chinese Communist Party would see into that, and they're linking it to a social credit score that ties geolocation data, every piece of data they can collect on a person, which really says, are you a good citizen in the eyes of the Chinese Communist Party? I certainly hope that the United States has no interest in developing anything like that. What we should be using is true blockchain, distributed ledger technology, like Bitcoin has, where you have trust established in a different way, where you facilitate permissionless transactions in keeping with the civil liberties of our own country. It would be a shame to see us chase after an authoritarian regime like China.
Does that mean, to jump ahead a little bit here, as we look at central bank digital currency here, and I'm going to get over my skis here, that means we don't want an account-based system, we want basically a token-based, so that you can have transactions without the Federal Reserve knowing what the transaction is?
That's absolutely the only kind I would support. And one of the alarming things is the Bank of International Settlement in Switzerland, which is really the central banker to the central banks. They've been doing a lot of work in this space and have some white papers available for public right now. And it seems like they're laying the framework for this centralized system that is more compatible with what China wants to. And it really is, where is the future of money? Where is the future of central banking going? And I think America has to get moving so that we develop a system that enhances our culture and our values, not China's.
Including one of privacy, I think you would say. Thank you so much.
Absolutely.
Really great to have you with us again. That's Congressman Warren Davidson, Republican of Ohio. Coming up, bumping up against that debt ceiling, we hear from former Treasury Secretary Larry Summers about how dangerous a game they're playing on Capitol Hill. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Much of the Yellen-Powell testimony on Capitol Hill this week was given over to Democrats and Republicans sniping at one another over the debt ceiling and who was responsible for bumping up against it. We talked with former Treasury Secretary Larry Summers earlier today, and he was explicit about how senseless and dangerous this standoff is.
Games of chicken are really dangerous. People who play games of chicken never plan to crash their cars and die, but occasionally they do. And that's the risk in this thing. And I hope people will find a way to recognize reality. There is no magic solution that is going to get us through this. Some 50 people in the Senate and 218 people in the House are going to have to take a vote that they would rather not take, but that there is absolutely no choice for our country to take. And I just hope we'll find a formula where that's done. You're already seeing the effect a bit in the Treasury markets on securities that are coming due soon. The longer this happens, the longer we look like a country that's having difficulty governing itself. And that's an important issue for our international perception. Most important op-ed of the year was written by Robert Kagan in the Washington Post this week, and it discusses how there's a real danger to American democracy from authoritarianism coming out of President Trump and many of his allies. And there is no responsibility, much more important than whether we have this size tax bill or that size tax bill, this inflation rate or that inflation rate, is that responsible officials find ways to marginalize that, I never thought I'd say it in the United States, authoritarian threat.
Hear more of that interview with former Treasury Secretary Larry Summers coming up on Wall Street Week tonight at 6 p.m. Eastern Time. Among other things, Larry addresses very directly Joe Manchin's proposal for the $1.5 trillion Build Back Better, and also talks about the corporate tax rate and how he can't understand why we can't raise it up to as high as 25. Coming up here, we're going to have a second hour Balance of Power on Bloomberg Radio, and we're going to talk with specifically Max Baucus, former ambassador to China, and also former senator. He was head of the Finance Committee, which was responsible for writing tax laws. We're going to talk to him about what's going on Capitol Hill right now and whether it all makes sense. That's coming up next on Bloomberg Radio. This is Balance of Power, and right now we're on Bloomberg Television and Radio.